Hello traders, you're welcome to this video and you're welcome back to the Forex Geek channel. If you're looking for a structured way to refine your intraday trading strategy, then you are in the right place. In this video, we are going to be diving deep into the Fibonacci intraday strategy. Alright, so it could be a very effective addition to your trading toolkit if you are a trader who wants to identify key market levels and enhance your decision making process. All right, so let us get right into it. So first things first, what is the Fibonacci intraday strategy? Well, Fibonacci retracements are based on a mathematical sequence that identifies potential levels of support and resistance in the market. So this is what we call a Fibonacci retracement, all right? This is the Fibonacci retracement tool, okay? Now, these levels help traders to predict where price might reverse or consolidate, okay? So these are very, very important price points on the chart. All right. For intraday trading, this tool is invaluable because it provides structure to an otherwise chaotic market. So let me show you how to draw the Fibonacci retracement levels. The first thing you need to do is identify a recent high and low on your intraday chart. Okay, so this is the 1 hour time frame. We're talking about intraday trading, so I am using the 1 hour chart. All right, as an intraday trader, you can use the 1 hour chart, okay, because you're targeting to open your and close your trades within the day. All right, so after identifying a high point and a low point, you just use the Fibonacci tool to connect these points. Like I did here, I drew this tool from this point to this point. All right, now you're going to have levels like 23.6, 38.2%, 50%, 61.8%, 78.6% displayed on your chart. Okay, these levels act as potential turning points for price action. Okay, now let us talk about how these levels work. Suppose the price is in a downtrend. As we can see here, this is an actual downtrend, right? So let us use this example. We have price in a downtrend, all right? And you notice that a pullback begins to happen. This remember that a downtrend is formed by the formation of lower highs and lower lows, right? We can see within this channel, lower highs and lower lows. So right after this first high and this first low has formed, we had a pullback. So the Fibonacci tool helps us to identify the potential points of reversal or continuation. After this pullback has happened, Fibonacci tells us the possible points where the continuation of the trend will happen. So we can see in this case, the pullback extended towards the 61.8% level, right? So right after that, we can see the formation of this reverse hammer, right? This reverse hammer pattern, which is a bearish candlestick pattern. So when you notice any candlestick pattern that forms around the Fibonacci level or around the trend line, in that gives a reversal pattern in direction of the trend, that could be your cue to enter the trade. For example, this is a sell trend and this is a bearish candlestick pattern, so this would have been a great place to enter a sell. Stop loss would have been above the swing high, and take profit could have just been at, you can either use the 0% Fibonacci level to exit your trade, or you can target the trend line support for your exit. All right, you can also decide to use other indicators to confirm your exits. Okay, so make sure that you identify trades in the direction of the trend. Okay, when using the Fibonacci retracement tool, you want to target opportunities in the direction of the trend. So right after the pullback, you find an opportunity in the direction of the trend. All right, please take note of that. Now, these levels of the Fibonacci retracements are most, um, they are zones of potential price reversals, and traders will usually look at 38.2%, 50%, and 61.8%. All right, these three levels are, very, very important price points. Okay, I don't know, but these are mostly the levels that traders target. It seems like these levels have higher rates of, reversals or continuations. Okay, so in as much as these levels are, very important levels that traders always look out for, sometimes you have the 23.6% causing a reversal. Okay, the price might not necessarily get to the 50 or 38.2 or 61.8. Sometimes the pullback ends at the 23.6. All right, so it's important to note that. Now, what is the best time frame for using the Fibonacci intraday strategy? Now, for day traders, the 15-minute, 30-minute charts, and even the 1 hour charts can work well. All right, these time frames strike a balance between capturing meaningful price action and avoiding excessive noise. Okay, you can also decide to check the 5-minute chart, for more precise entries and exit, but that is if you want to get, a very precise entry, unless you might not even need to go to the 5-minute chart, right? Okay, so speaking of managing risk, right, it is crucial not to rely solely on Fibonacci levels. Always confirm your trades with additional indicators. For example, you can decide to use moving averages or RSI or candlestick patterns, just for extra confirmation. It's very important. For example, just like I noted around here, you find a bearish candlestick pattern form around a resistance and around the Fibonacci retracement level, in this case the 61.8%, it could give you an added layer of confirmation that that bearish move is valid. All right, so in the case of a bullish trend, you should be looking out for bullish reversal candlestick patterns occurring around the support zones or around the Fibonacci retracement level. Okay, also set realistic stop loss and take profit levels. All right, trading isn't about being right all the time, it's about protecting your capital. Now, here's a quick recap of the Fibonacci intraday strategy. The first thing you should do is to identify a recent high and a recent low on your intraday chart. The second thing is to apply the Fibonacci tool to draw retracement levels. You stretch the Fibonacci tool for a downtrend. You should stretch the Fibonacci tool from the high to the low, right? And then the third thing is to watch for price reactions around the key levels like the 38.2%, 50%, and the 61.8%. Although the reversal can also occur around 23.6% or even 78.6%. All right, just be watchful and make sure that you confirm with additional indicators or candlestick patterns. Okay, because those can give you extra, hints as to which of these levels the reversal will occur in. Okay, and then finally, always manage your risk with stop loss and take profit orders. Okay, it sounds simple, right? Well, the key is to practice and build confidence in recognizing these setups. And that is it for this video. If you found this strategy useful, make sure to hit the like button. It really helps the channel grow. Don't forget to subscribe and turn on the notification bell so you never miss out on more trading tips and strategies like this one. Also, drop a comment below. What is your favorite tool for intraday trading? I would love to hear from you. Thank you for watching, and as always, happy trading.